Two men, same company, same position, same salary. For nearly 10 years, Jake and Michael lived almost identical lives. Then one Saturday morning, they both made the same decision. I'm buying a house. 10 years later, one family was enjoying financial freedom. The other was wondering how a dream home had quietly become a financial prison. The surprising part? The house wasn't the real difference. It was everything that came after. It started with a promotion. Jake and Michael had just received identical raises. Their annual salary had crossed six figures. Friends congratulated them. Their parents were proud. And for the first time, both felt they had made it. Within weeks, the conversation turned to the same question many Americans eventually ask. When are you buying a house? Open houses became weekend plans. Mortgage calculators replaced Netflix. Social media didn't help. Every scroll was another smiling family holding oversized keys in front of a beautiful home. Success suddenly had an address. Jake found his dream home almost immediately. A large suburban house with a 3-car garage, a home office, and a backyard big enough for future family barbecues. It was more expensive than he'd planned, but the bank approved the loan. The monthly payment would stretch his budget. It'll be worth it, he told himself. Michael liked the house too, but instead of asking, what's the biggest house I can afford, he asked a different question. How much house lets me keep living the life I want? The answer surprised him. He bought a smaller home in a nearby neighborhood. Not as impressive, not as expensive, not as perfect, but it left room in his monthly budget. At the time, the difference didn't seem important. After all, they both became homeowners. For the first year, nothing looked different. Both mowed lawns on weekends. Both painted spare bedrooms. Both invited friends over. From the outside, their lives looked identical, but invisible differences had already begun. Jake's mortgage consumed nearly half his monthly income. Property taxes were higher, insurance was higher, utilities were higher, maintenance was constant. Every unexpected expense felt like an emergency. When the water heater failed, the vacation fund disappeared. When the roof needed repairs, the credit card balance grew. Then came the furniture. A larger house needed larger everything. A bigger dining table, a bigger television, outdoor furniture, landscaping, new appliances. None of these purchases seemed reckless. Each one felt reasonable. But together, they quietly changed his financial life. Meanwhile, Michael's smaller mortgage gave him something far less exciting. Margin. Every month, money remained after the bills were paid. Some months he invested it. Some months he traveled. Some months he simply let it sit untouched. He wasn't trying to become rich. He was buying something far less visible. Options. 5 years later, the economy slowed. Jake's company announced layoffs. For the first time in his career, he felt trapped. Not because he hated his job, because he couldn't afford to lose it. Every mortgage payment depended on that paycheck. Changing careers wasn't an option. Starting a business wasn't an option. Taking time off wasn't an option. His dream house had quietly become golden handcuffs. Michael worked at the same company. He heard the same rumors, but his reaction was different. His emergency savings could cover months of expenses. His investments continued growing. His smaller mortgage meant lower pressure. If he lost his job, it would be stressful, not catastrophic. That's the power of financial flexibility. It rarely feels exciting until life tests it. 10 years passed. Jake's house had increased in value. So had Michael's. On paper, both had built wealth, but their lives looked very different. Jake often worked late. He postponed vacations. He delayed retirement contributions whenever unexpected expenses appeared. His house appreciated, but so did his stress. Michael wasn't living in a mansion. He wasn't driving luxury cars, but his family took vacations without guilt. He invested consistently. He accepted a new job he genuinely loved, even though it paid slightly less. He had something Jake didn't: freedom. Ironically, the smaller house gave him the bigger life. Here's the lesson most people miss. This isn't a story about renting versus buying. Buying a home can be one of the best financial decisions you'll ever make, or one of the most expensive mistakes. The difference isn't the house, it's whether the house owns your future. Banks decide how much they'll lend you, but only you can decide how much freedom you're willing to give up. Because wealth isn't measured by the size of your home. It's measured by the number of choices your money allows you to make. Jake and Michael earned the same salary. They both achieved the American dream, but only one protected the flexibility to keep dreaming. So before you ask, what's the biggest house I can afford? Try asking a different question. What kind of life do I want this house to make possible? Sometimes, the best financial decision isn't buying more house, it's buying more freedom.